Okay, thanks everybody for joining us. My name is Bill Neville, and I'm just going to go over a few slides and just to give you a little bit of information about the Entrust Group, and then I'm just going to start answering questions. So feel free to type in the questions in the chat box there, and I'll work through them as I go. So real quickly, Entrust, we are not financial advisors or CPAs or lawyers. We are administrators of self-directed IRAs. So to that end, we do not provide any investment advice or endorse any particular investment. Everything we present is for education purposes only. And if you are considering doing a self-directed IRA, we encourage you to talk with any attorneys, accountants, and financial advisors before choosing any investment that you want to make. The agenda is just going to be a little bit about Entrust, explain what a self-directed retirement account is, what your investment options are, what some of the restrictions are, and a few questions, popular questions that we get, how to get started, and then I'm just going to start the majority of the presentation. The majority of this webinar is going to be going over your questions. We have been in business for about 36 years. We are, as I stated, administrators of self-directed retirement accounts. So most people who have a retirement account, they have it with a big brokerage firm like a Charles Schwab or Fidelity or Vanguard or somebody like that. And those brokerage firms limit you to investing in stocks, bonds, mutual funds. In our case, and they also sell you those mutual funds, so that's how they make money. Whereas in our case, we don't sell you any particular investments. All the investment decisions you make are yours and yours alone. And we administer the account that allows you to hold alternative assets. And alternative assets, anything that's not a publicly traded stock, bond, mutual fund. We do about 12 to 16,000 transactions a month. We have roughly 22,000 accounts, and we hold almost $3 billion in investor assets. The majority of our staff, including myself, are certified IRA service professionals. That's what CISP stands for. We have a national continuing education program for realtors and for CPAs. And we do a lot of national and local in-person events and webinars like we're doing today. And we also sponsor IRA Academy. So we actually teach the course that trains other people in our industry what they need to know to pass the Certified IRA Service Professionals class or the test that needs to be taken. And we're doing that in Orlando later this year. So what is a self-directed IRA? It is an IRA in which you make all the investment decisions and you can hold alternative assets. So if you see an E-Trade or a Scottrade or Schwab or somebody like that advertising you can do a self-directed IRA, what they're talking about is that you're going to pick your own stocks. But a true self-directed IRA allows you to hold other things besides stocks, bonds, mutual funds. And so that's in our industry, self-directed IRA is you pick your own investments and you can hold alternative assets. So it gives you make all the investment decisions, and it gives you greater asset diversification. So if you have 5 different mutual funds, you might have a broker that tells you you're well diversified because you have a mix of small cap and large cap and international and et cetera, but you're still all in the stock market. Whereas if you have a piece of real estate and maybe some precious metals and a private placement and then also some publicly traded stocks, that at least it's a different kind of diversification. Whether you consider it better or not is up to you. All investments are held in an account administered by a custodian or trustee, so we handle all the custodial requirements for a retirement account to make your assets legal within the rules of the IRS. And so any retirement account, so a self-directed IRA is not a type of IRA. The types of retirement accounts are a traditional IRA, a Roth IRA for individuals, SEP, simple, and 401ks for business owners. All of those can be self-directed. So you still have to choose a type of account, whether you want a Roth or a traditional or a SEP or whatever it is. The self-directed is an industry term that means, again, that you pick your own investments and you can hold alternative assets. In terms of investment options, you can invest in pretty much anything you want. These are some of the more popular ones that we see. Real estate can be single or multi-unit homes, commercial property, land, precious metals. The 3 main most popular investment types in our industry are real estate, precious metals, and private placements, private equity. But as you can see, with real estate, could fall under a lot of different options, including promissory notes. We had somebody invest in cattle one time using their retirement account. Another person bought a racehorse. Somebody else invested in a bowling alley. Like literally, if you can imagine as an investment, you're allowed to do it with an IRA. There are certain restrictions as far as personal use associated with that asset, but in terms of the asset itself, you can own just about anything you want. The only thing you're not allowed to hold are collectibles, life insurance, and S corporations. And so collectibles, and you'll notice there's some asterisks there between metals and coins. So there is precious metals. There's investment-grade precious metals that you're allowed to invest in versus collectible coin collections that you're not allowed to hold in a retirement account. So again, the only thing you can't invest in, collectibles, life insurance, and S corporations. Other than that, if it's an investment and you're not violating the self-dealing rule, the self-benefit rule, then you're allowed to do it within your retirement account. So some popular questions: what assets can I hold within a self-directed IRA? And I just said that, pretty much anything you want. What are the rules for real estate IRAs? The main thing to know about associated with holding real estate within a retirement account is that the real estate that you hold has to be for investment purposes only, for the benefit of the retirement account. So you're not buying a property that you're going to use as a second home or a vacation home or for personal use, or to rent it out to or let a disqualified person use that property. So definition of a disqualified person is you as the account holder, your spouse, your ancestors, and your lineal descendants. So parents, grandparents, children, grandchildren, etc., are all disqualified persons, which means those individuals are not allowed to use a property owned by your IRA or work on a property owned by your IRA. So they can't rent it out, they can't stay in it for free, and they can't do any work on it. So if you are a contractor or you have a parent or a child who's a contractor and you want to use them to buy a property and fix it up and flip it, you can buy property and fix it up and flip it using your retirement account, using the money in your retirement account, but you and the other disqualified persons are not allowed to do the actual work to fix it up. And how do you open a self-directed IRA? Well, that's really easy. You just open an account, which we have an online portal that you can open your account with, or you fill out some forms, which involves a new account application and a fee disclosure form and some other things. And I will go over our fees at some point, because that tends to be a question that I get numerous times on these webinars. So you open your account, you fund it, usually either transferring from an existing IRA, rolling over from a 401k, or making an annual contribution, and then purchase your asset. And you purchase it by instructing us what investment that you want to make, and then the retirement account buys the asset. So if it's a property, the purchase contract is in the name of the IRA. We send the money to the seller, and now your property is owned by your retirement account, and your retirement account receives the rent, and it pays the bills, and we as administrator of the account, we process those transactions. We receive the money into the account, we pay any bills, and we do everything at your instruction. So that's it at this point as far as the presentation. The rest I'm going to do here is just get to these questions. So first question, can I use a 401k from my previous job? Yes, that's actually one of the probably most popular way that people fund their retirement accounts with us, is that they roll over from a 401k from a previous job they have. So you would open an IRA with us, and then you would roll over the money to your account with us and then instruct us what you want to invest in. Note that typically in order to roll over from a 401k, it does typically need to be a company that you no longer work for. Most of the time, if you want to roll over from a 401k to another account, to an IRA, the plan is going to require that you have what's called a triggering event. And the example of a triggering event is that you leave the company, that you're no longer part of the company. But yeah, that's a very standard way for people to fund an account with us, is to roll over from a previous 401k. Next question was, just wondering if you are going to discuss self-directed Roth IRA LLC. I'm pretty sure that's what I want to do, to eliminate transaction fees and to have funds available on the spot, waiting for them to be processed by the agency that holds my self-directed IRA. So what he's talking about here is that when you have a retirement, when you have a self-directed IRA and your IRA owns an investment, all the transactions have to funnel through us as the administrator of the account. So if you own a property and you need a bill paid like property tax or insurance, you send us the bill and we pay it because we're the administrator of the account and the account owns the property. But if you want checkbook control, if you want to be able to write your own checks rather than have to send the bill to Entrust every time you need to process a transaction, then you can open an LLC where the IRA is the owner of the LLC. So a single member LLC where the IRA is the owner of that LLC, and you can be the manager of the LLC, but you can't be paid to manage it, you can't take any expense reimbursement, but you can be the manager. So you would open a bank account in the name of the LLC that is owned by your IRA, then you instruct us to send the money to the bank account that you've opened in the LLC, and now you have checkbook control. So instead of the IRA buying the investment, instead of the IRA buying a property, for example, the LLC would buy the property. Now the LLC is owned by the IRA, so indirectly it's the IRA that's making the investment, but the direct owner is the LLC itself. So you get checkbook control over that. So, and yes, you can do that in a Roth. You can do that in a traditional, you can do that any type of retirement account that you have. You can create an LLC where the IRA, or if you have two different IRAs, you can partner those IRAs together and they both can be members of the LLC, will own the LLC, you manage the LLC, you go buy whatever assets you want in that LLC, and the LLC buys the assets, the LLC pays the bills, the LLC handles all the transactions, and then at some point down the line, you move all the money from the LLC back to your IRAs whenever you're ready to do that point. But if you ever read about checkbook control or checkbook IRA, that's what they're talking about. They're talking about creating an LLC within your IRA that would then the LLC would own the investments. Can I lend small businesses in my community short-term loans and handle contracts myself? So by can I lend, I'm assuming you're saying can your IRA lend small businesses in your community short-term loans and handle contracts yourself? So the answer to that is yes. Your IRA can loan to whoever you want it to loan to as long as it's not. So you talk about small businesses. The small businesses can't be owned by a disqualified person. So if you want to lend to small businesses, it can't be your own business or a business owned by your spouse or your ancestors or lineal descendants or spouses of lineal descendants, right, the list of disqualified persons. And then handle contracts yourself. You mean like structure the contracts, write up the contracts? Yes, you can do that yourself. You can't charge a fee for that. So if you're a lawyer and you want to bill for that, you're not allowed to bill for that. You can go ahead and set the contracts up, but you can't receive a benefit from it personally, right? So the IRA is the lender, and you can set up the contracts, but don't charge a fee to set up that contract. Next question, will you go over the procedure to move the money from a regular 401k account to the self-directed IRA? Sure. You open an IRA, then you contact the custodian of your 401k plan and tell them that you want to roll over from that 401k to the IRA you just opened, and they will have a process for you. They will have forms, or they'll take it over the phone or something. Each 401k, each custodian is different the way they necessarily handle that. But you contact the custodian of the 401k, tell them you're going to roll over, and then for Entrust purposes, we have a rollover form that you need to complete and send it to us, and we use that. It's an internal form for Entrust only that we use to match up to the 401k funds when they arrive. Okay, so just to repeat that, open an account, contact the 401k provider, tell them you want to roll over. They'll have a process for you, and fill out our rollover form for us to match up to the money for when they send to it. Can I transfer real property held in a solo 401k into my self-directed IRA? Same question about notes. Yes, you can do what's called an in-kind rollover, an in-kind transfer. If it's an IRA to an IRA, it's a transfer. 401k to an IRA, it's a rollover. But yes, you can move in-kind assets from one retirement account to another. What types of real estate investments are allowed in a self-directed IRA? Can one own a rental property out of the country? And the answer to that is for types of real estate investments are allowed in a self-directed IRA, all of them. If you can think of a type of real estate investment, your IRA is allowed to own it. Again, as long as it's not for personal use or any other disqualified person is going to use the property. You can own single-family homes, multifamily, offshore, land, you name it, your IRA is allowed to own it. So can one own a rental property out of the country? The answer to that is yes. I am going to add one caveat to that. Most countries, in order to own a property, are going to require you to set up some local organization, like the equivalent of an LLC in that country, and it varies per country. Like I think in like Peru they call them foundations, but you're probably going to have to set up some kind of organization, some kind of business in that local company, like the equivalent of in that local country, like the equivalent of an LLC. Have your IRA invest in that business, and then that business, that LLC, and I'm using LLC as a very generic term because it's going to be something different, called something different in each country. But that organization, that business you set up in that country is going to be who's buying the property. So your IRA would invest in that business. Most countries require that. Like outside the United States, they don't really have a concept of an entity known as a retirement account that's buying properties. So, but you can do it. You're allowed to do it. You're just going to have to structure it that way. Next question. My accountant explained there is a problem with having a rental property in an IRA since you're limited to the original purchase price. He said if a roof needs to be replaced, how can the money be added to the IRA account if you're already at maximum deposit allowed by the IRS? Well, so the first part of that question, I don't know if whether the question was phrased right or if the accountant didn't explain it, but you're not limited to the original purchase price. So you are limited by the amount that you can contribute to a retirement account on an annual basis. So if your IRA buys a property and you have to do work on it, if the property needs work and you don't have enough cash in the IRA to cover it and you're maxed out on the contribution that you're allowed to make in that year, then yes, you have to get money into that retirement account another way, which means, if you need money in your retirement account to pay an expense, to like pay for a new roof, like your example, you have three options. You make an annual contribution. If you're already maxed out, then transfer more money from another retirement account that you have somewhere else. If you don't have another retirement account somewhere else, then the third option is your IRA can borrow money. There are financial institutions that will loan to retirement accounts, or find any non-disqualified person who's willing to set up a promissory note that will loan money to your IRA. So your account is right in that it's a retirement account, and the IRS has rules on the maximum you're allowed to contribute to a retirement account, and you're not allowed to exceed that. And if your retirement account owns the property, your retirement account has to pay for any expenses. So you have to get the money into the retirement account to pay the expenses. So one of three options exists for you: annual contribution, transfer more money from another retirement account, or have your retirement account borrow money from either a financial institution or an individual who's willing to loan to your retirement account and not a disqualified person. So it can't be yourself that's loaning to the IRA because you're a disqualified person. We have a list of lenders who are willing to do what's called non-recourse loans to IRAs. So if this is something that you want to do, I'll be happy to send you the list. But you bring up a good point. If you're going to use your retirement account to buy property, you need to plan for the potential that you might have expenses. Obviously, if your retirement account owns a rental property, hopefully you're receiving rent, right? You're getting rent that's coming into your retirement account that's increasing the cash balance in your retirement account to cover any potential expenses. But all that needs to be thought about and accounted for. Next question. I'm a real estate broker, and I would like to find out if my clients can have partial property ownership in the IRA. Example, client wants to buy a property for $500K, client has $250 in their IRA. Can they buy the property and have 50% ownership in their IRA and 50% as an individual? Yes, the answer to that is yes. It's called partnering. But that partnering has to be done at the time of initial investment, right? So if your IRA bought a property, an individual can't come in later on as a partner. They have to do that partnering at the time of initial investment. So at the time that they're buying the property and they decide they're going to do $250 from the IRA and $250 from themselves, they have to do that at initial investment. But the answer to your question is yes, you can partner with anybody you want on initial investment, including yourself. I have approximately $75K from my past two companies in 401K. but want to move that money to a self-directed IRA so that I can invest in real estate. If I open an account with Entrust, can I invest more into this account as the usual price of is approximately? Well, you can contribute what you're allowed to contribute based on the IRS rules, depending upon the type of account that you have and your earned income. So yes, you can put more money in the account, but you can't exceed what the IRS limits you to contribute into a retirement account. But bear in mind, if you've got approximately 75 and the property is around 100, there are other ways that you can come up with the other money. Your IRA can borrow the additional $25K that you needed, or you can partner with someone else, including yourself, for that other $25K. I'm sorry, I got a question here. It says, NC PACES Act crowdfunding offer solar farm. I don't understand that question. You're going to need to expand on that a little bit. Can you use your self-directed IRA to buy part of a home in a partnership with your own regular funds? Yes, that's basically the same question I just answered. You can partner. It has to be a new investment. I'm going to emphasize that again. It has to be if you currently own a rental property, you can't add your IRA as a partner. Same thing, if your IRA owns a rental home, you can't add yourself as a partner, but you can create that partnership up front on a new investment. Do most money managers know about self-directed IRAs? Well, I guess it depends upon what you define as a money manager. Brokers who work for the big brokerage firms, they make their money by selling mutual funds. Do they know about it? I would say maybe. They want you to do it? Probably not, because they don't have a way of making money on it. There are registered advisors, registered investment advisors who maybe charge an hourly fee or something like that. Hopefully they have an awareness of it. But most, you asked if most, I would say, I don't know, probably not. Probably not most. What's the pros and cons to a self-directed IRA versus a self-directed 401k? Well, I mean, now ultimately your question is not just the self-directed, it's an IRA versus a 401k. First of all, with a 401k, you have to be, if you're going to have your own 401k, you have to be a business owner, right? So our 401k is an individual 401k, which means it's only for business owners, their partners, and their spouses. But what's the advantage of a 401k versus an IRA? 401k allows higher contribution limits. You can contribute both as the employee as well as the employer, and you can contribute, I think, $18,000 as the employee, up to $18,000 plus an additional, don't quote me on these numbers, I think another $6,000 if you're 50 or older, and then up to $54,000 as the employer, depending upon the income that you're taking as the employee. With an IRA, now traditional and Roth IRAs, those are for anybody with earned income, can open and contribute to a traditional and Roth IRA. If you're a business owner, you can do a SEP or a simple. A SEP also allows you to contribute up to $54,000, but only as the employer, not as the employee. The disadvantage to a 401k versus an IRA, 401ks are more expensive. There's a cost to owning a 401k because it's a whole plan that you have to pay for, whereas an IRA is. And 401ks also involve, there's more reporting that you as the trustee, you as the business owner become the trustee of the 401k, and it requires reporting to the IRS that you have to do that's not required with an IRA. Can the IRA purchase property in another country? Yes. In case you didn't hear that already, the answer to that is yes, but you're probably going to have to set up a business in that country in order to process the transaction. Can you clarify basic definition of self-directed IRA? Yes, it's an IRA that allows you, where you make all the investment decisions and you're allowed to hold alternative assets. And an alternative asset is anything that's not a publicly traded stock bond mutual fund. If the individual owes money to the IRS for back taxes, can the IRS seize the assets in the self-directed IRA that is holding the real estate assets? Yeah, that's a good question. They can, yes. Will they? Probably not. The IRS doesn't really want real estate. What they want is cash. What they may try and do is get you to sell the real estate. They might tell you have to sell it to, you might have to liquidate, and then you can argue, that it's an illiquid asset. But can they? The IRS is allowed to seize assets in your IRA, but like I said, if you hold real estate, They don't want real estate. They want cash. How are required minimum distributions paid out from a property investment account? So for those who don't know, at age 70 and a half, so prior to you can take a distribution from a retirement account anytime you want. Prior to 59 and a half, you're going to have a 10% penalty on top of the tax. From 59 and a half to 70 and a half, you're going to you can take a distribution without 10% penalty, but you're still going to pay tax, assuming traditional IRA. At 70 and a half, there's what's called a required minimum distribution. It's based on the value of all your retirement accounts. They add it up, and they use actuarial tables and come up with a minimum amount that you have to take. It's called required minimum distribution, and it kicks in at age 70 and a half. The question here is, how are they paid out from a property investment account, which I'm assuming means you don't have any cash. You just have property in the account, so you're illiquid and you can't take cash as a distribution. The answer to that is you can take a percentage of the asset. So if you have a property, and let's say the required minimum distribution, the dollar amount equates to 5% of your property, you can take 5% of the value of the property as a distribution, right? So you would quit claim whatever percentage value that is, whatever dollar amount from your IRA to you personally. So you would take a percentage of the asset as a distribution, and then you'd still have to pay taxes on that because you're still being distributed a dollar amount, but you're not receiving a distribution in cash. You're receiving a distribution as a percentage of the property. So what that would mean is, let's say it's 5%. Then going forward, if it's rented out, the tenant would now pay 95% of the rent to the IRA and the other 5% to you, right? And let's say the following year you want to do the same thing. You need to take a required minimum distribution. You're going to take it in property again. Do the same thing, take another 5%. And I'm obviously using percentages just for an example. But you would then own 10%. Your IRA would own 90%, et cetera, and year after year after year until eventually you would own the property entirely. Where can I go to get basic understanding of self-directed IRA? Well, you can go to our website, which is theentrustgroup.com, or you can call me or email me, and I'll be happy to talk to you about it. Or you can attend more webinars. If you set up a rental through a single-member LLC, you didn't finish the question, but oh, wait, there's the rest of your question. If you set up a rental through a single-member LLC, how do you take income? I am in the R&D stage. The rent goes to the LLC, then the LLC transfers money back to the retirement account, and then you take a distribution from the retirement account. So eventually the distribution has to come from the retirement account itself. Same way as taking a distribution from the property, as I mentioned earlier, though, if you want to take a percentage of the LLC as a distribution, you can do that as well. Note that we would need to update the fair market value of your LLC each year. So that means that the value of the asset held plus any cash held by the LLC would determine the fair market value. And then if you want to just take a percentage of the LLC as a distribution, you can do that. But if you want to take cash, then it's LLC has to transfer cash back to the IRA, and then we distribute it to you. Can I manage rental property in the account? Find my own tenants. Okay, so that's a good question. I want to clarify what we mean by managing the property. So the IRS doesn't require you to hire a property manager. So if you want to find your own tenants, or if you want to hire your own contractors to do work or anything like that, you're allowed to do that. Okay? What you can't do, what a typical property manager would do that you're definitely not allowed to do, is one, receive a property management fee. All right. So if you are a property manager, or if you just want to want to pay yourself a fee by taking 10% or 5% or whatever you want to do with an asset that's owned by your IRA, you're not allowed to do that. Okay. You can't you can't handle the money. You can't open an account and hold the money, the rental money. It has to come back to the IRA or to an LLC if it's owned by an LLC. So to come back to repeat the answer, yes, you can find your own tenants. Like, you can put an ad on Craigslist and do whatever you need to do to get tenants and interview them and show them the property and all that stuff. And if any work needs to be done, you can hire the contractors. Now, again, you can't do the work yourself, but you can hire the contractors and oversee the work and determine what needs to be done. You just can't receive a fee for that management, and you cannot open an account and hold the money that is associated with the asset that's held in the account. The money has to come back to your IRA. At what point would an LLC be required to pass profits down to the IRAs? Well, before you take it as a distribution, really. I mean, you can keep the money in an LLC account as long as you want, but at the point that you want to start taking the profits into your own account, that you want to start taking money personally, it has to come back to the IRA. And then also when you're done with it, when you're done with the LLC, when you are looking to liquidate and be done with it, then money all has to go back to the IRA. But prior to that, you could have all the money just grow in an LLC as long as you want. There's no requirement. Now, we're going to have to report. You have to report to us the fair market value of your asset every year. So you have to update us as your account is growing and the value of your LLC is growing. You have to report that back to us so that we can report it to the IRS. But you don't have to transfer the cash back to your account until you want to personally take it as a distribution. Then it goes back to the account, and then we distribute it to you from the account. If I'm self-employed, can I open a self-directed 401k? The answer to that is yes. You can open a individual solo 401k as long as you don't have employees. At least in our case, our 401k is an individual 401k. You can't have employees. Is there any way to use a self-directed IRA to invest in real estate for the purpose of earning money today? Or must all the profits go back to the self-directed IRA? Well, yeah, the profits have to go back to the self-directed IRA, but then you can immediately take it as a distribution if you want. But it has to funnel that way, right? That has to be the protocol, is that the money goes from the tenant back into the IRA and then get distributed to you. But it doesn't have to stay in the IRA. I mean, literally, the money can be deposited in the account today, and you can take a distribution of it tomorrow. So that's the equivalent of immediately, but it just has to go into the IRA first before we distribute it to you. It can't go from the tenant directly to you. By the way, if you do that, if you commit that's a prohibited transaction. Your IRA, your entire retirement account is at risk for being disqualified and being distributed to you. The entire account, not just the asset. So don't do any prohibited transactions. Can you talk about leverage within the self-directed IRA and tax implications? For instance, low leverage on real estate, how would income be taxed on the leverage portion? Okay, so you want to talk about unrelated business income tax and proportionally unrelated debt financed income tax. So if you use debt financing to buy an asset, so let's say your IRA comes up with a down payment of 50% and borrows the other 50%. So your IRA is leveraged 50% on the property. The way the IRA looks at that, they say, okay, 50% of that property is owned by tax-deferred money, right? The IRA contribution that you made, the money that's in the retirement account. The other 50%, the borrowed money that has been lent to your IRA, is not tax deferred. That's after-tax money that's being used. So what they're saying is if you earn income, the portion of that is earned by the after-tax income or the borrowed money is subject to what's called unrelated business income tax, or similarly, it's the same thing, but it's sort of the other side of the same coin, unrelated debt financed income tax. And so let's say in this example you have after expenses, you've earned $10,000 for that year in income. Actually, I'm going to say $11,000 to make this calculation easier, because the first $1,000 you get for free. So the IRS doesn't tax that first $1,000. But above $1,000, any income that is earned through debt financing is subject to unrelated business income tax. So in the example I give you, where 50% of the money is borrowed, that means 50% of the $10,000 is going to be subject to tax. Okay? So they'll take that, again, like the first $1,000 is free, that's why I used $11,000. Then the $10,000, they're going to take 50% of that, or $5,000. Your IRA is going to have to pay taxes on that, unrelated debt financed income tax, or UBTI, unrelated business taxable income. I hope that made sense. I sometimes have trouble explaining that. How about private placement investment? Are there any restrictions at level of investments from self-directed IRA, mezzanine or private placement? I'm not sure what mezzanine is, but The only restrictions are that your IRA can't invest in an asset owned by a disqualified person. And they even put certain restrictions on percentage ownership. So let's say you own a company, you're an investor in a company personally, right? So you've taken your money and you've invested in a company, and you own 49% of that business personally. Can your IRA invest in that? The answer to that is yes, because you own less than 50%. If you own 51%, then your IRA is not allowed to invest in that. But the combined, and I probably shouldn't use 49% because your IRA can only be a 1% investor then, because you can't exceed the 50%. So better example would be, if you own 25%, then your IRA can invest up to 25% in that company as well. Now the rules change a little bit if you are an executive with that company. So if you're like a CEO and you're getting a salary, then your IRA, it becomes a whole different set of restrictions on what your IRA can do. So your IRA can invest in any private placement. It gets tricky if you have a management or executive role with that company, or if you're personally an investor, and then it gets into different percentages. NC PACES Act attorney said your non-qualified investors can roll over IRA into LLC venture. Were they wrong? So you non-qualified investors can roll over IRA into an IRA can invest in an LLC. I'm not sure. I would need more specifics, I guess, as to what you're asking there. You can roll over a 401k into an IRA, and then it's allowed to invest in an LLC, as long as that LLC isn't owned by a disqualified person. Next question, to have checkbook control, can two separate IRAs of different people share same LLC? The answer to that is yes. That's partnering. You can partner two different IRAs into one LLC. Next question, if I have an investor ready to fund my real estate business, how would that work? He would open a retirement account with Entrust, and then he would roll over or transfer money to us, and then he would instruct us that he wants to invest in that business. And we have forms that we use called bidirection letter that he would submit along with the supporting documents for the investment. So in your case, it's a real estate business, so I'm guessing it's like an LLC. So he would need to submit the subscription agreement or the operating agreement for the business. We review that to make sure everything's done properly in the name, that the vesting is in the name of the IRA, not in the name of the individual. And then we would fund the investment. It's just open an account, fund the account, process the transaction. It's pretty straightforward. It just involves paperwork. What is the minimum amount required to open an account? There is no minimum amount required to open an account. We charge $50 new account establishment fee, so you got to pay $50. But you can open an account without putting any money in. We'll keep it open for a few months until but ultimately if you don't fund your account, we'll close the account, but there's no minimum that's required. What's the difference between traditional and Roth IRAs? So a traditional IRA is a pre-tax contribution that grows tax deferred. So when you make the contribution, you get a deduction on your taxes. You can contribute up to $5,500 or $6,500 if you're 50 or older. And then when you file your taxes, you deduct that from your reportable income tax, and so you're lowering your taxable income by that dollar amount. But it grows tax deferred, which means at some point the earnings are going to get taxed when you take them as a distribution. A Roth IRA is post-tax contribution, but it grows tax-free. As long as you're at least 59 and a half years old and have had a Roth account for at least 5 years. So you don't get a tax deduction when you make the contribution, but it grows tax-free. You don't ever have to pay taxes on the earnings. Again, as long as you've achieved age 59 and a half and you've had a Roth account for at least 5 years. If I am required to take out required minimum distributions, how will it work? So anybody that you have a retirement account with is going to tell you what your required minimum distribution is for that particular account. And it's based on actuarial tables, and the IRS essentially tells us what we need to tell you that your required minimum distribution is. Again, it's a minimum distribution, which means you can take out more than that. So if you have multiple retirement accounts, you can take that distribution out of one account. You can, like, if you have 3 different retirement accounts and the total distribution adds up to $40,000, you don't have to take proportional amounts out of each account. You can take it out of any one account that you want. But it's a minimum distribution that we will tell you, and your other custodians will tell you, here's your required minimum distribution, and then you request a distribution. You tell us. You can take it monthly. You can take a one-time distribution. You can do whatever you want. I mean, ultimately, how you take the distribution is entirely up to you. But we'll tell you what your required is for your account with us. We can only tell you your required minimum distribution is for your account with us. If you have other account holders, you got to add them all together and take that out. Is there a minimum deposit amount? No, there is not. Are your fees flat or based upon your portfolio balance? Okay, fees. That's the first time anybody's asked about fees. So let's go over fees real quick. We have, first of all, a new account establishment fee of $50 paid up front. Then we have an annual record-keeping fee in which we give you the option of either having a flat fee based on the number of assets you have in the account or an annual fee based upon a percentage of the value of the account. So the flat fee is $299 per asset per year. So if you have a property or if you have a private placement, it doesn't matter the dollar amount. It's going to be the value of the asset. It's a flat $299 per year. The fee or the annual fee based on a percentage of the value of the account. It starts at 0.95% and tiers down from there. So I can tell you the break-even between when it becomes worthwhile to switch to the flat fee is around $34,000. If you have less than $34,000, then you want to do the percentage based on the balance in the account. And we have a minimum fee of $199. If it gets above, it's like $34,000 something, $34,300, somewhere around there. You get above that dollar amount as a value, assuming you have one asset, then you want to do the flat fee, the flat $299 per year. Now, if you end up with 2, 3, 4 assets, those percentages change, right? And our pricing, the percentage based on the value is a tiered price. It tiers downwards as the value increases. So it starts at 0.95%. So it's a little less than 1% on the first $25,000, then the next 25 is 0.7%, and just continues to tier down from there. We also charge a transaction fee at the time that you instruct us to make an investment. For real estate, we charge a one-time transaction fee of $175. For non-real estate, we charge a one-time transaction fee of $95. Okay, next question. As money is being managed by pro money manager, how would I approach these guys with self-directed IRA concept? Well, I mean, if their fee is either hourly or if they're getting paid like based on increasing the value, then I would think that if they become aware that other assets like real estate or private equity or startups or anything like that is a way to increase the value of the account and for the money manager themselves to make more money by increasing the value of the account, that would be the way I would approach it. Plus, I mean, if they have clients who, it's good knowledge for a money manager to have if they have a client that asks about it. If nothing else, they should understand it as much as they can for any clients that come to them so they don't look ill-informed. Next question. Let's say you want to invest in a residential property with your IRA. You plan on fixing and flipping it. Why can't you be the one who does the work on the property? Because that's what the IRS rules are. It's in the Internal Revenue Code that says that the account holder is not allowed to stay in or work on the property. And I can tell you the thought, if you're asking why that's a rule, why the IRS put that in the rule, because it would be considered they consider it a contribution to your IRA. And the only contribution you're allowed to make to your retirement account has to be in cash. You have to contribute cash to an IRA and then use the cash in the IRA to invest in an asset. And if you do work yourself to fix up a property, then you're making a non-cash contribution to your retirement account. Can I buy a property from my self-directed IRA? No. You're a disqualified person. You, your spouse, your ancestors, and lineal descendants are all not allowed to buy a property from or sell a property to your self-directed IRA, as well as stay in or work on a property. Next question, could you discuss the difference between a solo 401k and a SEP and which is better? All right, well, better is, it's in the eye of the beholder. Beauty is in the eye of the beholder in this case. A solo 401k, so a 401k falls under what's called a qualified plan. So there's a whole set of plan documents associated with a 401k that you have to pay for. A 401k allows you to contribute both as an individual, both as the employee and the employer. So that's the big advantage of a solo 401k. You can also borrow from a 401k, whereas you cannot borrow from an IRA. Also, you can have a Roth option in your 401k. So you can set up a 401k and add a Roth option and make Roth contributions to an IRA. A SEP is much less expensive than a 401k, and you can only contribute as the employer. So you can contribute up to 25% of your income, max of $54,000 for a SEP, but that's all. You only contribute as the employer, not as the employee. You can't borrow from a SEP, and a SEP is basically a traditional IRA, so it doesn't have a Roth option. Although you could contribute to a SEP and then roll it over into or convert it into convert the SEP contribution into a Roth if you wanted to, and then but you can't just contribute into a Roth. A SEP is a traditional. A SEP is a traditional for business owners. Hope that answered your question. If you want to get into more details about that, email me or give me a call. You can see my number and my email address on there, and I'll email you some documents about specifics that goes over the difference between those two. How are taxes or returns being handled? I don't know what this is the second time you said mezzanine, and I don't know what this is talking about. How are taxes and returns being handled at mezzanine versus private placement? On a private placement, they usually will provide a K-1. Depending upon the private placement, if you're investing in an LLC that has multi members, they're going to provide K-1s, and then the K-1 is used to update the fair market value of the asset in the account. We use it to update the fair market value of the account, but that's it. The investments need to be appraised each year to establish a year-end value. We need an updated fair market valuation of an asset. But it doesn't necessarily need to be a formal appraisal. Like, you don't have to pay for an appraisal. If you're investing in a private placement, then the company itself should be able to provide that value. If you're investing in real estate, you can have a realtor run comps for you and provide that. Our fair market value form, we just need a third party to sign off on the form with the fair market value. So if you, as long as you fill out that form and have a third party sign it, like I said, for real estate, you can have a realtor run comps and come up with a fair market value. If you have private equity, then just go to the company and ask them what the value of your asset is. So you don't need to do a formal appraisal. You don't have to pay for it. But we are required to report an updated fair market value to the IRS every year. So yes, we need to get a fair market value. At least we ask for it every year. If I have a checkbook IRA, can I move some money from LLC account to a savings account giving interest but still keeping funds liquid? I mean, if you're setting up an LLC and you're opening an account, it's entirely up to you what type of account that you want to have. If you want to have a savings account, that's fine, but it has to be an LLC savings account. You can't have a savings account in your own personal name. It has to be a savings account that's opened in the name of the LLC, right, that you're managing. So if you want to move it into your own personal savings account, then you got to transfer it back to your IRA and have it distributed to you. But if the bank is willing to open two accounts for the LLC, one's a checkbook and one's a savings, that's up to the bank. But again, it has to be in the name of the LLC. What are the basic benefits of self-directed IRAs as a business entity to buy and sell real estate? The benefits are that it's a way to grow your retirement account. If you think that real estate is the best way to grow your retirement account, then you need a self-directed account to do that. If you don't think that real estate is the best way and you think mutual funds are the best way to grow your retirement account, then you don't need a self-directed IRA. You can do that with any brokerage firm. But basic benefits is simply that. You are allowed to hold alternative assets, and if you think there's an alternative asset that you want to make to grow your account, you need a custodian, you need a company like Entrust to do that. is the money from the next question, is the money from the investment only used to fund your IRA and repay the borrowed money? Is there a way to pull some of the cash flow to pay personal bills? Sure, you can take a distribution. I mean, your retirement account, you're the beneficiary of the retirement account. If you want to take out money from your retirement account, you can take a distribution from your retirement account anytime you want. Just bear in mind, prior to 59.5, you're going to pay a 10% penalty on top of the tax. After 59.5, you're not going to pay a 10% penalty, but you are going to pay a tax on it, right? It's a taxable event taking a distribution from your account. Of course, this is unless it's a Roth. If you are talking about a Roth, then you can take a distribution and you're not going to pay taxes because Roths grow tax-free as long as you're 59.5 and have had a Roth account for at least 5 years. Is there an age when one needs to begin divesting assets in the IRA account? Well, there's no age when you need to begin divesting assets, but there is an age when you need to start taking distributions, and that's 70.5. And as I mentioned earlier, if you don't have cash in the account, you can take an asset as a distribution or a percentage of an asset as a distribution if you want. But, I mean, as far as one needs to begin divesting assets or liquidating your assets, that's up to you. But 70.5, you got to start taking distributions out of your account. Can my husband and I combine our 2 IRA accounts and buy a rental property? So just to bear in mind, you each have to have your own retirement accounts. So they can't be combined into one account, but they can be partnered to buy a rental property, yes. So on that purchase contract for that rental property, when it lists who the buyers are, your IRA would be listed as a percentage owner and your husband's IRA would be listed as a percentage owner based on the amount of money that each IRA is contributing. But the answer to that is yes, you can partner those to buy an asset. If you partner with your own IRA at the time of investment in a property, as you just stated, can you live in it? No. If your IRA owns 1% of a property, you are a disqualified person, as is the other people I mentioned are disqualified persons. With checkbook IRA, real estate, does the tax return need to be filed every year? So an LLC has to file some report. There is some return that needs to be filed by an LLC, but I don't know exactly what forms need to be filed. I've never had an LLC, but talk to an accountant if this is something you want to do. Can self-directed IRA purchase LLC crowdfund shares? Yes. We actually have a number of investors who are using their IRAs to do crowdfunding. Provided the crowdfunding site is going to allow for IRAs to be investors. And a lot of crowdfunding sites require you to be an accredited investor. So if you have a specific crowdfunding site in mind, there's a handful that we work with that refer people to us. So feel free to email me or call me and let me know what site that you're thinking about, and I'll let you know if we have a relationship with them. With checkbook IRA, real estate, I already answered that. I have an annuity pension account maturing. Can I roll that over to Entrust Advantages? Can I roll that over to Entrust Advantages and Disadvantages? So with an annuity, to get out of an annuity, there's usually going to be like a surrender charge. So you need to talk to your annuity company and ask them about that you want to roll. You're thinking about rolling that over into an IRA, and ask them, what's going to be the end result of that, because the amount that's in your annuity, it's basically they're going to offer you, it's a buyout, right? An annuity is a guaranteed amount every month or every year, however they calculate it. So if you're not going to be in the annuity anymore, you can't move the annuity into an IRA. You have to get out of the annuity and then transfer the money to an IRA or roll over the money to an IRA. So talk to the company that holds your annuity about what your end result would be if you want to roll that over. You asked advantages and disadvantages. I mean, if there's an investment, the annuity is a guaranteed amount that they're gonna pay you, and they're basically taking your money and investing it where they feel like investing, and then just guaranteeing they're going to pay you out. So you don't have a lot of control over you don't have any control over where the money gets invested. You just have control over. You don't really have any control over anything, for that matter. With an IRA, you take control. You get to make your own investment decisions. Can you expand on something you said earlier about having an IRA fund an LLC and having the LLC own property? If so, then can you live in it? So it gives you checkbook, again, when you have an IRA buy a property directly, the IRA owns the property. So on the purchase contract, when it lists who the owner is, it's the Entrust Group for the benefit of your name and account number. That's the name of your Entrust IRA. If you want to use an LLC, then you set up an LLC where the owner of the LLC, the single member, is the Entrust Group FBO, your name and account number. Your IRA doesn't own the property. Your IRA owns the LLC. Now you can take that LLC and go invest in whatever you want. If you want to buy real estate, you can do that. But no, you can't live in it. Your IRA still is the investor in that property indirectly. It's done through an LLC, but ultimately it's still with IRA funds. So you're still a disqualified person. You, your spouse, your ancestors, descendants cannot live in the property, can't work on it. Question about offshore real estate investments. Would Entrust disperse the funds, or if I set up an LLC, can I disperse the funds for the purchase myself? Yeah, if you're going to do offshore real estate, Entrust would fund the business, the LLC that you set up in that country, and then you can be the manager of that business and then use that to go and buy a property. But again, that's still retirement account money, so that money has to come back to the IRA eventually. So if you buy a property and it's being rented out, that money has to go back to the LLC and then from the LLC to the IRA at some point before it gets dispersed to you personally. Okay? Next question, what are the main benefits of having self-directed rental properties in an IRA? It's a way to grow your retirement account. Rental properties in an IRA is a way to grow your retirement account that's different than having mutual funds. If you think it's the best way to grow your retirement account, then that's the way to go. Does Entrust charge a fee for required minimum distributions? No. Can an investment share, actually if you have us do a wire transfer of the money, then we charge a $30 fee for any wire transfers, but we don't charge a fee for to cut a check for required minimum distributions. Can an investment share ownership between IRA funds and personal funds? Yes. It's partnering. You can partner your IRA with yourself on a new investment. How is fair market value determined for reporting each year? Hey, Eric. This is a client of ours. You let us know what the fair market value is, and you do that by having a third party determine the fair market value and then reporting it to us on a fair market valuation form. So if it's real estate, then you can have a realtor run comps. If it's a private equity, have the company provide the fair market value for you. Just reach out to the company you invest in. They should be able to come up with something. Usually you can get it from a K1. They might give you a K1 that will have the amount that needs to be reported. What is the difference between a rollover for business startups and a self-directed IRA? Is one better for starting an LLC house? Well, to finish the question, is one better for starting an LLC house flipping businesses? So rollover for business startups, it just means that you can use your retirement account, and it's really for individual 401ks to invest in your own business. Okay, so if you have an individual 401k, you can use that money through this program called Rollover for Business Startups. They're not separate from each other. They're essentially the same thing, but it's a way for you to use your 401k to invest in your own business, to fund your own business. Is one better for starting an LLC house flipping business? I mean, it's not really, it's two completely different things. A house flipping business, when the ROBS program is for a business that you're doing in which you are selling something or you're manufacturing something, right? It's a business. It's not just an LLC that you've created for the purposes of making investments, which is just a pass-through. So you can have an IRA invest in an LLC for house flipping. You can have a 401k invest in an LLC for house flipping. But if you want to have a business in which you are selling something, selling a service or selling a product or something like that, the ROBS allows you to use a 401k to invest in that business, that startup business that you have. Can you take distributions earlier and pay taxes on years between 16.5 to 7.5? Sure. You can take a distribution from your account anytime you want. You can take a distribution when you're 25 if you want. You're just going to pay a 10% penalty on top of the taxes. From 60 to 70.5, you can take distribution or not, and you're going to get taxed, but there's no penalty, or there's no 10% penalty. 70.5 is when you're required to start taking distributions. But again, you can take a distribution now. You can take a distribution anytime you want. Just bear in mind, prior to 59.5, there's a penalty on top of the tax. Does the real estate have to be appraised yearly to establish reevaluation? Have them run comps. It doesn't have to be a formal appraisal. We are required to report to the IRS an updated fair market value of your account on an annual basis through Form 5498. If you don't report to us a fair market valuation update, we're going to report to the IRS the fair market value that you had the previous year. So it's not, if you don't report it to us, it's not like nothing gets reported to the IRS. We're going to report the same thing. But I think that if you have a property for, say, 10 years and you never update the fair market value and it continues to show the same value, the IRS might raise an eyebrow at that if they get around to looking at that. So we are required, but we're required to report it to the IRS on an annual basis, and that's what we do. Are you restricted when you can sell a property? The only restrictions is who you can sell a property to, which is you can't sell a property to a disqualified person. But as far as when, no, you can sell property in an IRA anytime you want. The IRA receives the revenue, right? The property is held in the IRA. It's bought by the IRA sells the property, the IRA receives the cash from the sale. Can you start with a SEP and then as your income grows change to a solo 401k? Yes. For a value of LLC or IRA to be reported annually, does real estate have to be valued by a third-party appraisal? Again, we require that on our fair market valuation form that a third party sign the form. So, but again, it doesn't have to be a formal, like you don't have to pay for an appraisal. For the value of an LLC, I mean the value of the LLC is going to be the value of the cash. It's going to be the cash that you have on account plus the value of your asset that you hold in that LLC. And that's going to determine the value of the LLC. So if you have a property, you have a tenant, you have a realtor run comps on the property and add that with the cash that's in your account and report that to us on our fair market valuation form. Regarding transfer of estate to heirs, what is the best way to manage that? You're getting out, I mean, I don't know if you're talking specifically about IRAs. I mean, I'm going to only answer that from a standpoint of IRAs because I'm not a real estate attorney or a CPA. So if you're talking about your personal estate, talk to a CPA or talk to a real estate attorney or talk to somebody who's equipped to answer that question. From a standpoint of your retirement account, you name a beneficiary when you open your retirement account or when you hold it, and you can change it anytime you want. When you die, your retirement account passes to your beneficiary. It's as simple as that. What's the Entrust fee structure for self-directed with and without check options? $50 to open a new account, $299 per asset, whatever that asset is. So with a LLC, we don't help you set up the LLC. You're going to have fees probably to set up the LLC. We don't provide you check option. If you have an IRA, we write the checks. If you want to write checks, you're going to have to create an LLC, and you're going to have to pay somebody probably to create the LLC unless you're a lawyer and you can do it yourself. And then there's a chance that in the state that you set up the LLC, you're going to have to pay an annual fee to the state. In California, it's $900 a year. Can I pay off a mortgage I have on a house using my IRA and then use the property as a rental? No. Your IRA, if your IRA is buying a property, it has to be a property it has to be bought from a non-disqualified third party. You already own the property. You're a disqualified person. The IRA can't buy your property from you, and it can't pay off your mortgage. So no. Is the yearly fee based on the account value? There is 2 annual fees, one based on the number of assets, one based on a percentage of the value of your account. If you're partnering with your self-directed IRA to purchase a rental property and you want to obtain a mortgage for your portion, do you have a resource list of lenders that accept that type of arrangement? So we have a list of lenders who will lend to your IRA. If you're talking about partnering with your IRA and you borrowing for your portion of it, here's the issue you're going to run into. The money that's coming, the portion that's owned by your IRA is not allowed to be used as collateral or as down payment for you to borrow money. Okay? So if you're bringing 50% of money from the IRA and you want to borrow the other 50%, the bank is only allowed to loan to you based on the 50% not owned by your IRA, and you have to come up with your own individual down payment for that 50%. right? You can't, the money that's in the IRA is not yours. It's your retirement account's money. It only becomes yours when you take it as a distribution. So you can't go to the bank and say, I'm putting 50% down from my IRA. That's not allowed. They can't use that portion coming from your IRA as collateral to loan you money. You have to come up with your own loan independently from the 50% or whatever percentage owned by your IRA. That being said, it's unlikely you're going to be able to pull that off. It's typically either your IRA uses all cash to buy property, your IRA borrows the money, and your IRA owns the property 100%, and your IRA pays the loan, or you partner, and you have the money and your IRA has the money. But if you want to, the one way potentially you could do that is you set up an LLC, and you fund the LLC like partly with your IRA and partly with your own personal money, and then have the LLC borrow the money. But that LLC loan, that loan to the LLC has to be a non-recourse loan because your IRA is involved. Next question, can a Roth IRA and an IRA jointly on so a Roth IRA and a Roth IRA and a traditional IRA, they're both IRAs. Can they partner jointly on a property together? The answer is yes. You can partner your two different retirement accounts on a new property. Can I have both a Roth and traditional self-directed IRA and contribute to both of them in the same year? If I can, how much? Yes, you can contribute to both, but the maximum you can contribute is $5,500. Or unless you're 50 or older, then it's $6,500. So you can do, 2,001 and 3,500 in the other, or vice versa. But a maximum of $5,500. Once the account is open and funded, what are the ongoing fees? $299 per asset per year, or a fee based on the value of the account that starts at 0.95%. And by the way, those fees only kick in once you invest in something. As long as you have cash, there's no annual fee. You have to actually invest in something. Does the fair market value on real estate have to be ascertained by appraisal each year? I've gotten this question a lot. It doesn't have to be a formal appraisal. Have somebody run comps. Have a realtor run comps for you. Are the fees you talked about for each asset in the account? Yes, the $299 per asset per year is a per asset fee. How can the account be used to buy and hold, sell gold and silver? You would open an account, you would transfer money into your account, then you would go to a dealer and tell them that you want to use your Entrust account to buy gold, silver, platinum, and then you also have to find a depository that's going to hold the gold and silver. The dealer that you work with might have a depository they recommend. We have a portion of our website that's specifically for precious metals. We have a list of all the depositories. So the dealer would send us the invoice for the gold that you choose to buy. We would send the money to the dealer. The dealer would send the gold to the depository. So your IRA would own the gold that's being held at a depository. If one takes a 10% distribution per year for 10 years, would you then personally own the property? Yes, that's exactly what would happen. So if anybody didn't get that, I mentioned earlier about you can take a percentage of the value of the asset as a distribution rather than take cash if you don't have cash. So this person's asking, if you took 10% of the value of a property every year for 10 years, would you then at the end of 10 years own the property? The answer is yes. You would own 10% the first year, your IRA would own 90%, then 20 and 80, 30, 70, which means that each year as that percentage changes, you're going to have to notify the county, you're going to have to update the ownership of that property, and if it's rented out, the tenants would have to pay checks to the owner would change each year. So if you're renting it for $1,000, they'd pay you $100 and your IRA $900, then the next year $200, $800, $300, $700, et cetera, et cetera. And you have to keep changing the ownership percentage of the property. The property would go from being owned 100% by the Entrust Group FBO, your name and account number, to after the first year it's owned by the Entrust Group FBO, your name and account number, 90% in interest, and then your name, 10%, and then the next year 80-20, et cetera, et cetera. You have to keep changing the ownership percentages. If I own a real estate, market value $450,000, current loan amount is $250,000, can I open an LLC in this house and pay for my IRA? No. You own it. Your IRA can't take over ownership in a house that you already own. With Entrust IRA, is there an option to trade stocks, bonds with free cash balance or between real estate investments? So we're not a dealer broker. So we can't do the trades ourselves. We do have a relationship with TD Ameritrade. that if you wanted to do some stock, bond, mutual fund trading in between real estate investments, we do offer a platform through TD Ameritrade. But it's a little bit cumbersome. I wish it was better. It's not great, but yes, we do. We're not a dealer broker, so we don't do it ourselves, but we set up a platform with TD Ameritrade. I have an LLC for properties that we own. Can we use this LLC to hold the IRA real estate investments, or is that too confusing? It's not that it's confusing. It's not allowed. If you want to have your IRA own and invest in an LLC, it has to be an LLC that you don't already personally own. Because you own this LLC currently, your IRA is not allowed to invest in it. You're a disqualified person. That's a prohibited transaction. You have to set up a new, unique LLC that your IRA invests in. You can personally have yourself come in and partner, and maybe partner with that new LLC with money from your existing LLC, or there's probably a way to structure that as a partnership. But your IRA can't invest in the LLC that you currently own. I reviewed your fees, but there is no mention of RMDs. Is an RMD considered as a partial account termination and subject to the $250 fee? No. RMDs are not considered a partial account termination. We treat RMDs different. They're just a distribution that you're required to take, and we send that. And the $250 fee is for a full account termination if you close out your account. I thought you could, here's the next question. I thought you could take out as much as you've contributed for a Roth IRA even if you're not at retirement age. Yes. When I was talking about so with a Roth IRA, you can take out your contribution anytime you want. If you want to take out the earnings, you have to be 59.5 and have the account for at least 5 years. But yeah, you can, if you contributed and change your mind, you can take that out the following year because you didn't take a tax deduction on it. But the earnings, you would pay tax on the earnings if there is any. Back to the question of doing work on a rental property, can you do repairs but not charge? The answer to that is no. Again, that's considered an illegal contribution to your retirement account. They don't allow you to. You're not allowed to do work. It's as simple as that. There's no way around it. You physically, personally, you, your spouse, your ancestors, lineal descendants are not allowed to do work on a property owned by your IRA. No getting around it. Would you structure multiple properties under individual LLC within the SDIRA? Yes, you can do that. I mean, you would set up the LLC, then the LLC would buy properties, but yes, you can hold multiple properties. You can't just move an existing property into that LLC. Your IRA would have to fund the LLC, and then the LLC would be used to buy properties, but you can buy as many properties as you want. I have a situation where a local small business is trying to raise cash. Can I set up an LLC and loan the entire amount and the company make monthly payments for a contract term of 3 years? Sure. As a matter of fact, you don't even have to set up the LLC. Your IRA can loan them the money directly. Just set up a promissory note and have your IRA be the lender and have them sign off on the borrower and loan the money from your IRA. But if you want to do it through an LLC, that's up to you. It gives you checkbook control. But yeah, absolutely. You can use your IRA to loan money. Can I borrow from a Roth IRA like I can through a Roth 401k? No, you can't borrow from an IRA. You can only borrow from a 401k. And by the way, borrowing from a 401k is only a maximum of $50,000. It's up to 50% of the value of the 401k, maximum of $50,000, and it has to be paid back within 5 years. In an LLC-owned, self-directed IRA structure, how would I borrow against the equity of the first LLC investment to purchase the second property and so on? Well, if you're talking about when you say I borrow, the answer is you're not allowed to borrow. Can the LLC borrow additional money? Sure. I mean, if there's a lender out there who's willing to loan additional money to the LLC, they could do that. But you personally are not allowed to use a self-directed IRA-owned LLC to borrow money in your own personal name. That's prohibited. You're not allowed to do that. You're not allowed to use your IRA as collateral to borrow money personally. You're not allowed to use assets in an IRA-owned. You're not allowed to use assets held in an IRA as collateral for you personally to borrow money. And the LLC would be owned by your IRA. You're not allowed to use that as collateral to go borrow money. You're not allowed. That's illegal. What happens if the value of real estate lowers due to market issues? Does that loss affect your tax obligation? Yeah, sure. I mean, you would update us with the fair market value of your account, and it lowers the fair market value of your account. I mean, you would update us with the fair market value of that asset. It would lower the fair market value of your overall account, and and that would lower your required minimum distribution. Can I convert my IRA to a Roth without 10% penalty before I am 59.5? So you want to convert your traditional IRA to a Roth. You don't pay a 10% penalty to a conversion, but you do pay taxes on it. Doesn't matter. You don't have to be 59.5 or anything like that. You can convert it to a Roth. You're going to pay, so you're taking pre-tax contribution and pre-tax earnings and contributing it and converting it to a post-tax account, post-tax contribution, post-tax earnings. You will pay taxes on that conversion. You don't pay a 10% penalty. You just pay taxes based on your income tax for that year, right? So if you happen to, maybe you didn't make any money that year, then convert it, and then you can, you'd pay taxes just on that. But if you have income tax that year, it's just going to add on to whatever you're going to pay in income tax anyway. Is money in a 457B plan and a 403B accounts for practical purposes of this discussion subject to the same rules as money in a traditional IRA? Yes, those are qualified plans. They're also, a 401k is also a qualified plan. So they all operate under the same rules, that it's pre-tax contribution that grows tax deferred. So when you take a distribution from it, you're going to get taxed on it. You can convert those to a traditional, or you can roll those over into a traditional IRA and use a traditional IRA to make investments. But yes, those are 457, 403B, 401k, traditional IRAs, all subject to the same tax rules. You get taxed when you take it as a distribution. Where can we find good advisors for retirement tax advice? I understand Entrust does not give referrals. I mean, I know a guy here in the Bay Area that knows a decent amount about self-directed IRAs. I think other people in my company might have people local to them. So depending upon where you are, there might be somebody in our company who can give you a name. But otherwise, I think it's just a matter of asking around and asking if they know about self-directed IRAs, if you're specifically talking about self-directed IRAs. Can you invest in a property with other IRAs owned by other individuals? Yes, you can. Is the fee based on property-owned values and the additional cash in the account? For example, if I own $200,000 worth of 3 properties and have an additional $30,000 cash, what would the fee be? In that case, you would have 3 assets, $299 each, so that would be $897 a year. That's still less than the fee based on the value of the account. So if you wanted to do the fee based on the value of the account, we would use the full value of $230,000, and then we would come up with it's based on our tiered pricing that we have. But I can tell you that that would be more than the $897 that your per asset fee would be. Once the property has been transferred year by year out of the IRA to the individual, when it hits 100% owned by the individual, how do you close out that property from the IRA? We just remove it. I mean, it's been distributed to you. Each year that you take that 10%, we report to the IRS that we've distributed whatever dollar amount. Like we're not reporting the IRS that we're distributing an asset. We're reporting a dollar amount to the IRS that we're distributing. At the end of it, that dollar amount no longer exists in your IRA. It's been fully distributed. So we've sent a 1099 telling you what we've distributed to you, and now the asset's gone from the account. It's been fully distributed. Same way if we distributed cash. We send you $10,000 in cash. The cash is gone from the account. It's a distribution, and we do a 1099-R. If you are using $50, I don't know if that's 50 or 50,000. If you're using let's say 50,000 of your cash and 50,000 is a distribution from your IRA, can you do some or limited physical work on a flip house investment? No. If your IRA owns an investment, you're not allowed to work on the property. If your IRA owns 1%, owns any amount of the property, you're not allowed to stay in it or work on it. None at all. Yeah, there you go. You meant 50,000. Okay, that was the last question. Wow, that was a lot of real estate stuff. Again, I think some of you are probably regulars to this webinar. Thank you for joining us every month. And there's my contact information. If you have any questions, email or call me, and I will be happy to answer your questions. Check out our website, theentrustgroup.com. There's a lot of information on there. And good luck with your investing. Thank you.